Oh, this isn't good. I don't have a script today. But that is all part of the plan because today and this entire week I want to do something different. Rather than the twice a week longer videos where we review the macro, go over all the charts, take a bunch of requests, I want to record a video every day this week going over my portfolio in real time, day by day, talk about the actions I'm taking in my trades, what I'm thinking about for the month ahead, because we did have a disappointing October, particularly for crypto. There's a lot of indecision in markets. Tech and AI, certain names are still running. Crypto has been underperforming. Gold has stalled out a little bit. And that indecision is palpable out there. And we saw that even just with the Hindenburg omen last week, with how many stocks are in 52-week highs versus 52-week lows. It is a structurally divided market. So by doing this, I hope you guys can just see how I'm thinking about my portfolio and dissect that a little bit to take something away for your own trading and investing. Now, for those of you who don't know about how my portfolio is structured, if you aren't in my Patreon or haven't taken a class with me, traditionally I'm more of a fundamental tech disruption investor, more buy and hold style. So 23 and 24, my portfolio was 80% long-term hold, 20% trading. And I switched that up this year, just seeing that indices were getting into a third-year bull run, which traditionally are marked by more volatility. We had new leadership coming in the US, which also leads to more volatility. I shifted things up, so now I'm 40% long-term hold, and I'm 60% trading. So I'm trading much heavier right now to try to take advantage of the volatility in markets. But there will be times again where, say, if we enter into a bear market, I get more defensive, and then I'll be looking for value again. So that shifts through the seasons, but just to give you a framework of where I'm coming from and why you will probably hear me talk about taking more active trades. And with some of my options, some of those are expiring in January. So I really need to make decisions quickly. So let's get into the charts, and I'll go over the indices, the charts I'm looking at for trades, and then I'll see you guys again every day this week, especially as earnings come in for some of the names that we're looking at, to go through it day by day and play by play. Wow, that rhymes. So cheesy. All right, let's get into it. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Okay, starting here on the S&P 500, and I always start by looking at the indices just to see how those are doing. And broadly speaking, the S&P 500 and the NASDAQ are still strong. And what's notable to me is how weak the selling has been since Jerome Powell's press conference last Wednesday. We have had much more aggressive sell-offs. And with him throwing cold water on the idea of rate cuts, you would have imagined that this would have sold off a lot more than it did. So the bears have a lot of proving to do, and they have not done that yet. And we haven't even really closed our gap up open. We bounced off of these highs from last Friday at 68.44. That gap close would be at about 68.27. And I'm just going to draw one line in here. Our breakout into all-time highs, which was sitting right around here at just over 6,800. So all of those are areas down below where we would find support. If for some reason there was a major sell-off, the 20 weekly is now sitting all the way up at 65.40, which is right in line with the lows of that pullback on the 10th of October. So that's an area that we've been talking about the street buying in. So any pullback right now, I'm thinking is just going to be a daily higher low, and structurally, at least from what I can see right now, there is strength in the indices. Obviously, that's concentrated in a few sectors, and we see that represented when we go over to the NASDAQ, where NASDAQ, more tech heavy, is stronger and is further away from its gap close than the S&P 500. And I'll just draw that same line in here for the NASDAQ. But really, to even get to the top of that gap close, we'd be at 25,591, and right now we're at 25,961. A little bit of a pullback overnight on both indices. And interesting to see that crypto actually, which broke down, and we'll talk about this, but is having a little bit of a recovery right now as the indices are pulling back overnight. So after I look at the S&P 500 and NASDAQ, I will look at the HSI before I go into individual Chinese names, because I do have a couple trades on there. And broadly speaking, HSI is on the stronger half of this line that I have drawn in. There's been a bit of indecision, but China is still pumping in liquidity. So it's good to see that we had our daily close back above this zone at 26,000 on the HSI. And then I'll switch over to SMH semiconductors, which is still looking strong, has been consolidating, certain names. NVIDIA has still been moving and has been buoying the sector. TSM has been dragging a little bit. MU bounced back up today. But in terms of overall targets for this sector at 406, we still have some room to run to the upside. And let's just see how far we have to go there. And we've got about 11% still to the upside for that price target for the sector, which even though some names are overextended, I'm thinking, okay, this is good. The sector still has room to move. The individual names are not at their price targets. So there should be still some momentum to play. All right, in terms of going over the charts, I'm going to start on my biggest holdings in my portfolio since those are the most important and really impact the bottom line. And Tesla, for me, Tesla and Hood make up the biggest chunk of my long-term hold portfolio right now. I already unloaded most of my MicroStrategy earlier this year, which was also a big portion of the long-term hold portfolio. And, then I'm building positions in a few other names, but this is really the biggest chunk. And Tesla is still playing out this breakout. We had did we get our all-time high daily candle close? Oh man, just about even today. Maybe by a few cents we got it, but we're targeting this breakout. And I sharpened up my 100% fib extension. It was a little bit off. And if we sharpen that up, not counting the 1 wick on the 4 hours, mapping this off the daily, that would get us to $560 by about the 24th of November. So I'm still assuming that this price target is in play. The reason my extensions are a bit off is because I was doing this off of the daily chart. But if we take this off of just a larger scale, and NJ in the Patreon community brought this to my attention. He was running a fib extension, and I'm doing this live, from the lows of 2024 up to the highs here and down to the lows. And that also had our 100% fib extension at that same level, a couple bucks higher at 563. So it's nice to see confluence between a smaller time frame pattern and a larger time frame pattern, both landing there. I have some short expiry calls too that are expiring in January that I just got into a few days ago when we had earnings, and then we had that big pullback and that move back up. Whenever you see that signal, if you watch the video, that normally leads to higher prices. So on the pullback last Friday, I got into calls on Tesla. Actually, no, not last Friday, the 24th. I got into calls on Tesla that are doing well right now, but I'm just keeping an eye on this day by day to see if that continues. And if we deviate or pull back too far, 5 or 440 would really be an area where I would consider getting out of the trade because it would be showing weakness and it would break the previous swing low. But right now, at least for the short-term trade, I'm staying in it and I'm not doing anything with my long-term hold portfolio. My long-term hold portfolio, however, if we get up to this price target, there is a good chance we'll see a decent pullback. So I would consider a portion of that, turning it into a swing trade where I take maybe a little bit off the table and then reload on the pullback. But I'll just have to see how the weekly chart is looking at that point. All right, looking to Hood, there honestly has not been much for me to do lately outside of hold on for the ride. Now, on this pullback here, I did have some covered calls that I sold that I was hoping we would get back closer to about 115 where I could buy those back because it has just been running away. But right now I'm scouting this just for a daily lower high. So if we can't break our previous highs at 154 and we make a lower high here, that is notable on Hood. And we have run for a long time. And if we go to the weekly RSI has been overextended for a while. We have a bearish divergence on the weekly. I believe we do on the daily as well. We do have a bearish divergence, not the strongest bearish divergence I've ever seen, but we have that on the daily as well. So we know these things can't run forever. And I'm anticipating volatility coming in Q1. So if we can't make a higher high, it might make sense to hedge some of this position, even though it is a longer term hold play. Okay, moving on to Bitcoin, I'm just starting on the monthly just to look at the bigger picture. And I was happy with the monthly close we got, that we closed well above 108K. 108K closing below there would have had us print a bearish engulfing candle. So the monthly candle close was good, but the selling that we've seen to start this week is not so good. If we're looking at the weekly candle, it's fairly bearish right now, but the good thing is we are just barely holding the confluence model center cloud here on the weekly, and we're just riding this RSI breakout from the overside. So we've broken down some structure, and I actually did a swap with some of my crypto today, swapping some Solana into Bitcoin, and I'll talk about that more once we get into the Solana chart. But if we go to the daily, I suppose the thing that Bitcoin is doing better than some of the other names in terms of our daily candle closes, we are holding that line in the sand right now, which is really sitting at, let's just say 106,000, just above. So if this fails, I think there's a good chance that we are dropping lower. And the main support I've been targeting for Bitcoin is sitting around that 96K level. It was at 95K, but now it's a little bit higher. So let's just draw that up here. And just want to make sure I am on regular and not logarithmic. So if we go all the way back to August of 24, and we connect all our dots here with this trend line, and let's extend it out just a little bit more. All right, there we have our underside support. So this has been support for us for the last couple of years, the local uptrend that I'm watching. And if we drop down, I would anticipate support coming in around that area, which would sit, between 96.5 to 97, depending on when we intersect this. Now, if that were to happen, we will be on more alert and need to start considering hedging or exiting some positions, because in terms of the overall structure, in terms of the higher lows, higher highs, higher lows, higher highs, now we made a lower low and presumably a daily lower high. And are we going to make another lower low? And this break would be concerning because we would be breaking this previous swing from the 21st of June. Maybe we still find support at this trend line, but it is getting me to be more cautious, just the general structure that we have started forming right here. Now, one thing I think is worth noting, because there's a lot of talk right now about the crypto cycle extending or potentially being over, and let's just get into the price action. Even if a trend line like this fails, it doesn't mean that the overall bull run is over. It just means that the asset might need more time to chop around and find its footing, and it could still move higher down the line. So a trend line break really is just speaking about this trend that we've been in since August of 24, not continuing at the same clip and the asset needing more time. Where I get a little bit more cautious is if we have major structural breaks. So I would consider this swing low here at 74K as our major structural line in the sand, meaning that it connects our previous highs roughly from that consolidation that we had in March of 24 all the way through November of 24. It connects those highs to this low here where we backtest it for support, and a break below an area like that would really, shift things more bearish, where you would have to be much more defensive with your portfolio. And perhaps you even want to draw other lines in the sand. If I'm looking at our December to January highs, we had support roughly around this range here at 93K. So that could be another area that you are paying attention to. A lot of folks will say 88K as well. I think it's good just to draw out these lines to maybe give yourself a progressive range of, okay, if this level hits, I'm going to sell X amount, or this is the action I'm going to take. And really the one for me right now would be this 98K level is another important one, because we would be taking out that previous swing low, and let's just mark that out. All right, we've got them all on there. Then this is the one from June of this year. So let's see how this plays out, but we definitely are on alert with crypto. And again, that doesn't mean it's over for crypto, but certain sectors are definitely outperforming at the moment. And crypto has not been doing a whole lot all year. So it's probably worthwhile looking at sectors that still have more positive momentum. Okay, and speaking of weakness in crypto, so Solana today broke this near 7-month uptrend that it had been holding since the April tariff lows. So when this broke this morning at around $170 in my long-term hold bag, not my trading bag, on my cold storage device, which was about 50% Solana, 50% Bitcoin, I took half of my Solana bag and I shifted half of that, so 25% of my Solana into Bitcoin and the other 25% into USDC. And this is something that I had already been thinking about. I mentioned this on Friday's video that if that level fails, I'm going to have to get a little bit more defensive. So I took that action today. And again, just to reiterate, this trend line breaking doesn't mean we are necessarily entering a bear market, but we have to be careful. And just like we drew out key levels on Bitcoin, if Solana were to break this previous swing low at $155, and we can just draw in that horizontal line, that's when I would start getting a little bit more cautious than I already am on this asset, because we would really be starting to shift structure. And if we zoom out to bring in all the price action, from January, and we can even go further back, Solana has had some proving to do in terms of it still being in a macro uptrend, in terms of we have higher highs, higher lows, higher highs, lower lows. Now we really need the asset to prove to us that it can make higher highs again above our January highs of 194 or 96, whatever it was at. And while this uptrend has been constructive, it still has not proven to us that it can break those all-time highs. And now if we get a breakdown here on this swing, it really sets us up for a lower high and a potential continuation to the downside. So we have to be cautious, and this has some proving to do. But again, just breaking this trend line isn't enough to say that we are definitively breaking down, because this could bounce from support and honestly could chop around for quite some time before making a decision one way or the other. That was not a forecast, that was just me squiggling on the chart. So don't pay too much attention to what I just drew there. Okay, so I have a lot of decisions to make on other positions, and Celsius is another one that's top of mind that I'm thinking about from Friday. Is this a double top? And there was so much going on today that I didn't even notice that this closed below $60, which was my line in the sand on a daily close to get out of my short-term position. So again, just to recap, had one longer term trade from the $20 range, sold at the $60 range, started getting in again once we broke this downtrend. So I have a spot position at around actually $53 is my cost basis on the spot position. And then I have some options that I took for this potential cup and handle breakout. The options are pretty much neutral right now, but I need to make a call on those quickly, because if this does pull back, there's a good chance that we might confirm this as a local double top, and then we would come all the way down to $33. So I need to make a call on this, and probably by the time we record tomorrow, I'll have made a decision one way or the other on Celsius. Okay, another one I need to make a decision on, but I have more time because my calls don't expire until the middle of next year, is Deckers, which I got into calls on this bounce, and then earnings really disappointed. Had a gap down and continued to fall. Now we're into key support around 81, deviated a little bit today. Really all the way down to 75 or so is still a decent support zone in my mind, because that corresponds with these previous highs from 2021. So I'm still okay with it here. If I was just building a position now, this would be a much better place to get into a trade, because you could buy into that 75 zone and have a stop just below. But we're 7 days down in a swing. We are oversold on the daily. We surely are on the 4 hour. So it seems like this should get a bounce on soon. We're starting to get buy signals here. And it's just one that I'm watching, but I don't need to take actions on as readily because I've got a lot of time to act on this one. Okay, let's look at Chinese names really quickly. I'm in JD, and then I have a very small position in BIDU, almost a negligible position. And it's not showing the overnight price action, and we're not to earnings yet, but something happened, and this jumped over 7% overnight and is sitting at these previous highs at just over $130. So you'll have to take my word for it because TradingView is not integrating that overnight price action for some reason, and I have extended trading hours. I have adjusted for dividends. I don't know what's going on there. But we bounced at a perfect point for BIDU. Again, this is not a very significant position at all. But after pulling back from these all-time highs, and we hit the price target already from the massive falling wedge breakout. I really have to compress this and the chart's going to get messy. But that price target was sitting around $141. We exceeded that. My expectations right now for this are just that this is going to chop around and probably tighten up before it makes a decision. But I'm happy to see the little bounce. What I do want to look at is JD, because that one has been a laggard in the space. And right now, let's just go zoom out a little bit. I should take this on the daily because I'm really watching the daily support with how this has been chopping around. And on the 4 hour, we're about to print a mean reversion dot. We're getting close to the bottom of the range. There might still be a bit of selling in this, but overall the structure has been constructive. So assuming this is our local low and we don't make a lower low, I would have to imagine that we're going to try to get above the 200-day moving average and then break out from there in this much larger symmetrical triangle that we've been in. And on the daily, this is really what I'm watching for that compression. We found support. I got in right here on this wick down on the 10th at around $31. So I'm just letting this play out and being a bit patient, and sorry for the scaling issues there as I was trying to delete. So on the Chinese names, not too much to do. BILI is still one I'm watching, which is so fun to say, BILI. I might not even be saying it correctly. But this one, while it is overheated on the larger time frames, I'm still watching it for a breakout, and I want to get into a position here because we have this potential fourth time breakout coming up, and we are clearly trending up in the Confluence Model upper band. I wish this would give me a bit of a pullback, and a bounce point to get into a play, but it might be one that's just going to be a breakout play. But those are the Chinese names I'm watching. One thing I forgot to look at the start is gold. It's just interesting to keep tabs on. And it did have a massive sell-off, biggest profit taking in history for gold. And now is just consolidating around that $4,000 an ounce, which is what I would anticipate after a massive move like this, that we're just going to go into months of consolidation. But the thing that I'm not seeing, and similar to what we had in this period here, is we're not seeing that necessarily rotate into Bitcoin and that Bitcoin narrative catch on. So this is something to pay attention to, just looking at those two assets in contrast. And I suppose you could argue that, you found support at 4,000. Now maybe it's getting a bit of rejection there. So watch this, but really anywhere down to 3,800, that would be the next area of support. It could just establish a massive range for the next several months. Okay, I was going to get to HIMS next, but since Palantir also had earnings today, I'm deviating from the plan a little bit. This is not one I'm in, but since I forgot to report on it on Friday and it has earnings this week, we'll just look at it really quickly. The thing that's notable on Palantir, it broke its range highs here at $189, let's say 190, and had this breakout, and it had a double beat on earnings, but the expectations are ultra high. This candle is notable. That it had a massive wick up to 221 and was met by massive selling demand, pushing it all the way back down to 198. So over a 10% pullback there. And let's just see how we spiked after hours. And top of the range, bottom of the range. Yeah, 11% if we're measuring it that way. So pay attention to this. This might be a near-term top for Palantir here, a candle like this. It's hard to tell. I haven't been in it for a while, and it defies expectations. We are still, broadly speaking, on the overside of this trend line that did play resistance for years, overhead resistance for years, and that shows excessive strength. You would imagine now that we're into blue sky breakouts that we should at least hit the 786 or the 100% extension, which would be sitting at $240 for the 786. So we got pretty close to that today, or the $266 mark for the 100% extension. But interesting mixed reaction to what were positive earnings. Okay, now HIMS is one that I want to get into a trade on, and we were talking about Friday about HIMS looking like it was going to pull back to about $40 and enter more of a range. And we got that on earnings today, but not quite to $40. I had my limit order set at, I think, 40.67 or something. We got to 41.08, so my limit order did not fill, but we held these previous lows, I mean, perfectly to the dollar and cent there, which was a good sign, and closed back above the 200-day moving average on HIMS. Now, this has been beat up. It did miss a little bit on earnings. I didn't catch the earnings call, but I'm assuming by this candle close that the earnings call was constructive. So seeing us hold above the 200-day moving average would be a good sign. And I might have to get into a short-term trade tomorrow just because on the 4-hour, we are recovering. On the daily, we're still hovering around support and might be printing a mean reversion dot. But seeing the market reaction tomorrow on HIMS will probably have me taking an action by the time we get back to this tomorrow. Okay, I'm not going to go over every little name I have in my portfolio in smaller positions because some of them I'm not taking any action on, but I'm going to talk about the ones that have earnings coming up or had something notable happen. And earnings on CoreWeave don't happen until next week. This flag pattern, I was thinking this could break out positively, but now we have a daily lower high in play. And now the game plan is watching these previous swing lows at 113 to see if those are going to break to the downside or not, and then scout another opportunity for a potential entry. But this is definitely showing some weakness. And speaking of showing weakness, if we go over to Circle, we were talking about this on Friday, and this level here breaking at 120, which it did today. We're still holding this trend line. So for my spot, since I'm in from $31 on an IPO, I'm still watching that. I do need to make a decision with my calls because I got into calls here as we were breaking out of this falling wedge, and those are pretty much even right now, if not slightly down, just because of the time decay. And those are expiring between, so I think a couple are for January and a few are for March of next year. So some have more time than others, but this week I'm going to need to make a call on this. So Circle is a top watch for me. One that has earnings coming up on Wednesday is Unity Software. I'm not as concerned with this earnings play because I'm still building a longer term position in this. The daily would suggest after this little breakout and flip of trend that reaction is most likely going to be positive, but I wouldn't mind a pullback because I would love to add a little bit to my position at lower prices. And even if we get back down to about $31, retesting these previous highs and this previous wick down low, I would be happy with that. But broadly speaking, we have definitely changed structure in terms of our local lows in August, breaking these swing highs from December of 23. And I'm assuming this is going to continue up. If I had to guess, because things were a little bit overextended on some time frames, particularly if we look to the weekly, we got a mean reversion dot and RSI up here. I would not be surprised if this, even if it heads higher, if it does chop around for a bit before really having another meaningful move. And I would welcome the opportunity to add to my position. So this is one where I'm watching it Wednesday into earnings, just seeing if there are any opportunities. And it might be worth dangling some limit orders at these levels because you can't always act quickly to set limit orders, say at $33.50 and at just above $32 there to see if I can get a fill. Okay, and another one where I just got into a small trade and not all my position, and it was a little bit like catching the falling knife, was Meta. And it dropped to my secondary entry zone. I didn't nail this today, but if we're still here when the market opens tomorrow at the 50%, I will add a little bit to my position. If we drop the 50%, I'm going to close my position and just give this time to settle out. So what I did was riskier, and sometimes it's better to wait for the other side of the recovery. So you might be getting in at similar prices here on the bounce, but at least you have confirmation of the trend turning as opposed to trying to catch the falling knife and not knowing exactly where that's going to go down to. So keeping an eye on Meta, probably going to add to my position tomorrow, or if we gap down on the open, then I would close out of that, because really the next support isn't coming in till about 592 to 600, somewhere in this zone where we have the next 382 fib level and that volume cluster on Meta. Take a quick look at Amazon, which didn't give me an entry after the selling on Friday, bounce up on the ChatGPT partnership. We are getting a bit overextended on the daily here, so I'm hoping this can cool off to give me a shot, but this does seem like it is going to move higher over the next several months, so still looking at that. And also looking at Alphabet, which is just consolidating after this breakout. It still has higher to go. I would love to get a pullback to 265 to 270 to try to get an entry. So keeping an eye on Google as well. Okay, one thing I did notice today is that metals have been weaker, and I've been wanting to get in on a position on REMX. And those of you who have been following the channel for a while, after this multi-year breakout that we had earlier this year, I missed the initial breakout, and on this pullback I was hoping to get in at around 47. The pullback in July didn't quite get there, so I never got a fill. Now this has really run away, and I guess we should look at past levels, and where we just got on REMX is the major resistance zone overhead, because it corresponds to all these lows in March and April of 2023. So we're selling off a little bit and cooling off. So I don't think it'll happen this week, but this will hopefully give me an entry. And now on the confluence model on the daily, we've taken our 3 swings in the upper band. We just broke into the center band. This might just chop and take some time, but I would hope that there might be a good entry around the 200-day moving average or the confluence model center cloud. So I'll be watching this one carefully. The other one that got really beat up is USAR, USA Rare Earths, on the China trade deal. This one's tricky because it is into support, and it was very tempting for an entry today in the sense of us hitting this little uptrend line right here. But it is a minor uptrend. Our major uptrend would be sitting right at the 200-day moving average and the bottom of this range at $14. This is not a very compelling move, how this rocketed up and sold off so aggressively. I still maintain that rare earths, even the domestic ones with the deal, are going to be needed over the next several years. So I'm thinking about this as a bit more of a long-term play, but there's volatility in it right now. It was tempting me. I mean, really, the level that we're at right now is aligned with a lot of these previous highs. We could definitely drop down to this 1430 area. So keeping an eye on this one for an entry as well, and this would most likely be a longer term play, but be careful because of how volatile these have been. Okay, the video today is a little bit longer, but I'm just laying the groundwork with all the names I'm watching, and then each subsequent day we're just going to focus on the particular ones I take action on. BBAI is another name where I need to look to exit this week because it was holding up and just broke down on the daily. My spot position is still from the last time we tested the 200-day moving average. I think I'm at like $5.13 or something. But it seems like we're at least going to come back down to test the bottom of the range before bouncing. And for trading, there would potentially be a better entry there or at the 200-day moving average. So broke down on the 4-hour, on the daily time frame, we're in the confluence model center band. I imagine that as the daily lower band comes up that we would find some support there, but it would make sense just to try to get in a little bit lower as this daily RSI cools off. Okay, another one I've been watching for a potential entry and now am probably going to play a little bit slower is Coin. So Coin, if you recall, I got out of my trade right here as the daily RSI broke down. Thought that was a mistake, but even with constructive earnings last week, we got a little bit of a bounce, and we've been just making daily lower highs. We haven't made a lower low yet compared to the 21st of October, but with the weakness in crypto, I'm watching this, and if we break down, then the next potential zone to watch would be at around $290. Below that, this trend line isn't really anything worth watching. That's just a price and time extension. But we'd also be getting into the Confluence Model lower band. I'd watch this diagonal as well at the Confluence Model center band. Maybe we can find a bounce right at that even 300 level. So, you know, Coinbase, they are adding a lot of features and their profits have been positive, and they're doing a lot more integration with alts and credit cards and different things. You know, it's not really the everything app yet like Robinhood, but I was impressed by the earnings call last week. But if the weakness in crypto persists, this might get beaten up in the nearer term. So we'll just have to watch it. And in terms of RSI, I mean, I would love to see the daily RSI get back to the bottom of the range, but that would take some time. Okay, and last one that I'm going to need to make a decision on this week on earnings. Moderna had a great bounce on Thursday of last week and met by equally strong selling the last 2 days. So bullish engulfing candle and a couple bearish candles. We're moving right into earnings on Thursday. So this is just one to watch. This to me was just a double bottom play that has been forming since April of this year. So assuming we don't break below those lows of $23, it still seems like a decent setup, which is just $1 below. So one, I'm keeping my eyes on to see if the structure holds, or if this is really shifting to something a bit more bearish. And interesting thing here, this almost looks exactly like the circle chart where, you know, normally head and shoulders patterns are found at the top of trends, but you could argue that you have a head and shoulders that could be construed as a continuation pattern, which could give you some targets to the downside. So definitely something to watch on this one, because Circle was playing out something similar. Okay, and the last one I'm watching is GLXY, which really hasn't given me a sign yet. I have my alert set here at 33. A break below that would have me reconsider. You know, I have a longer term options play on this, but it would make me reconsider just because it might chop around and pull back a little bit more before making its next move if we do break below 33. And if we bounce, then obviously that would be a different story. But it definitely found some resistance today. So keeping an eye on this one, and hopefully we'll have something to report later this week. Okay, so that is it for the charts. And that is an understatement. That was a bit of a marathon, but at least that lays the groundwork of the assets I am looking at. And this will be a bit more abridged for the rest of the videos this week, where I'm just going to talk about the actions that I take every day on these trades. So I hope that's helpful and you can take something away from it. If you have any suggestions or if you like the format, let me know below, because obviously I want this YouTube content to be helpful and instructive to you also. I value the feedback very much, and I'll see you guys tomorrow. Bye.